Can you tell me what exactly you understand with ITC? Any one of you? What do you mean by ITC, which is commonly known as input tax credit? Input tax credit. How much you know about it? Or are you hearing this word for the first time? Quickly. Yes, another one thing is cascading effect. What else? In a very simple language. If I'll ask you to explain, can you explain, Roston?
Yes, sir. So
Please.
basically, input tax credit is given to a business when someone, now for example, there is A and B. If A is doing business with B, so when B has to pay taxes to the government, the government gives him a levies the tax a little bit because he has already paid tax to the previous person.
I mean, how it works.
Uh, the
Anyone?
government reduces. I'm not able to explain it.
Yeah, it is not exactly what we are looking for. And honestly speaking, we have discussed several times when we started learning GST. That time also you have learned about ITC. Just now you are going to recollect and realize. Okay, let me explain and then you will realize what I am referring to. I think these are the initial PPTs which we started long month ago from June onwards. Okay, and here only there was one slide, that is slide number 14. Okay, let us try to understand what this slide number 14 wanted to explain to us. This is nothing but input tax credit. Okay, what is the basic fundamental of input tax credit? It says that if the tax has been paid, there are two things. One is cascading effect to be eliminated, not exactly, but because see, at last the value is added only. So that is not exact answer, but yes, what you have rightly stated, if it has been paid by earlier vendor, the subsequent vendor is going to gain the benefit of it. If the tax has been paid by the earlier vendor, the subsequent vendor is going to get the gain of it. Okay. So suppose manufacturer has paid the government tax rupees 20. Okay. And he sold the goods to wholesaler. Wholesaler has made a value addition of 50 rupees. Here we have assumed the tax rate at 10%. So he has made the value of 200. He paid 10% of that 20 rupees as a tax to government. When he sold the goods to wholesaler, wholesaler also had made certain value addition and it rise up to the value of 250. So he had added the value over here as 50 rupees. Okay. And the final tax liability on 250 is coming as 25 rupees. 25 rupees is output tax liability. And this 20 rupees is input tax credit. Try to understand. For wholesaler, okay, 25 rupees is output tax liability and 20 rupees is input tax credit. Agreed or not? Okay. So when this output tax liability will come of 25 rupees, that time wholesaler will ask, boss, this when I have paid 220 rupees, it was inclusive of the tax. 200 rupees is the value of the product and 20 rupees was the tax I have paid to manufacturer. Am I right? So this 20 what I have paid to them was my input tax credit from the government. Was my input tax credit from the government. Okay. So when my liability will come as 25 rupees, I won't pay this 25 rupees. I will avail the ITC against output tax credit. Liability, sorry, output tax liability. And I'm going to pay the net tax of 5 rupees. And honestly speaking, he is liable to pay only 5 rupees because he has done the value addition of rupees only 50. 50 ka 10% is how much? 5. Which was earlier known as value added tax. Same logic has been applied in GST also. But here the nomenclature has been changed and it is known as input tax credit. Earlier it was known as set off. Okay. Again, suppose wholesaler has sold the same product to retailer. So retailer is supposed to pay 250 rupees to wholesaler. Agreed? So in this 250 rupees, what retailer has done, he has paid 200 rupees for, wholesaler, as he has added the value, 50 rupees retailer who has added the value. And even retailer has added the value and made it to the extent of 300 rupees. So now the tax liability of 300 at the rate of 10% will be how much? 30? Yes. So when it comes to output tax liability of 30 rupees, again he is asking government, boss, this 30 rupees I will not pay. This 30 rupees I will not pay. Why? Because when we bought the goods from them, I have paid 20 rupees ka tax to the wholesaler. I have also paid 5 rupees ka tax to the, 20 rupees ka tax to the manufacturer and 5 rupees ka tax to the wholesaler. So my eligibility of tax credit is 25. My eligibility of tax credit of 25. So I'm going to pay only 5 rupees. So I'm going to pay only 5 rupees. And that is very correct. That's very correct. Because he has again made the value addition of only 50 rupees. And 50 rupees ka 10% is 5%. So this is how you can avail the tax paid by the earlier vendor, by subsequent vendor when there is a output tax liability of GST. Understood everyone the basic concept of ITC? Let us try to understand with an example. Yep. Mr. X of Pune supply the goods to Mr. Y of Mumbai for 1 lakh. Mr. Y supplied to Mr. Z of Nagpur after adding 20% value addition. Calculate GST at every stage and also how it has to be paid to the government if the GST rate is 5%. Okay? Now let us try to understand what will be the tax liability for X which they are going to collect from Y. Can you tell me which kind of tax will be applicable over here? interstate or intrastate? Interstate or intrastate? Intra. So CGST and SGST. Inter is wrong answer because both the city is in Maharashtra state. अभी तक आपको ये नहीं समझ में आया तो आप लोग सेक्शन 9 में क्या कर रहे थे? The right answer is intrastate and the liability will be CGST and SGST. Okay? So he is going to collect from Y 5%. 1 lakh ka 5% 5,000. So it will come, the total value from Y he is going to collect as 1,10,000. Now again Y is selling to Z of Nagpur after 20% of value addition. So 20% of 1 lakh will be 120. Now Y will be liable to pay the tax. This is output tax liability for Y. How much? 6,000 rupees and 6,000 rupees. Yes or no? Because 1,20,000 ka 5% comes 6,000. Yes or no? Once it comes to the Y's liability, he won't pay 6,000 rupees. He is going to take the set off or ITC of 5,000 rupees, which was paid by X to the government and collected from Y. Understood? Which was paid by X to the government and collected from Y. Ha, Yana. Understood, everyone? Which was paid by X to the government and collected from Y. अरे हाँ या ना, इतना इजी चीज पूछ रहा हूं यार तुम लोग. कौन सा रॉकेट साइंस है इसमें? So he has availed the benefit of ITC of 5,000 rupees and he is going to pay only 1,000 rupees as I have mentioned here. Is this clear? Okay. Then what will happen next? Then what will happen next? How the government is not a loser. Government was expected to get 6,000 rupees. He will get. From X, he is going to get as 5,000, 5,000. And from Y, he is going to get 1,000, 1,000. Understood entire concept? Understood entire concept? So this will be assignment. At 9:40 again I'm going to ask how it works. लिख के रखना. M of Kolhapur supply 24,000 का goods to S of Satara. Mr. M purchased the goods from C of Mumbai for 20,000. If the GST rate is 9%, get me these answers. मैं आपसे पूछूंगा. Because after Gavaskar sir ka lecture, again there will be additional lecture from 9:45 to complete your syllabus. Other than Rostin, nobody is writing. Why so? Rushik, Mohit, Paras, Aprajita, they are to seen in the video. Nishtha, Shivani, Aditya, Sunita. Remaining all are in mute mode. I don't want to bother about them. 2 दिन के लिए बीपी बढ़ा के कोई मतलब नहीं है. Understood everyone? Till here? Tell me yes or no. Are you alive? यहां तक आप लोगों को समझा? The basic fundamentals of ITC. Am I really talking to A division? TY BAF? Or it's only one-way communication? Are you able to hear me? Chalo. Other student other than Meghna, are they able to hear me now? Aprajita is also able to hear me. Others are not able to. Anaga is also able to hear me. Okay. So I hope the basic fundamental of ITC is clear to you all. How it works. Yes or no? At least those who are hearing. Dheeraj understood. Only Dheeraj. Rostin, Aprajita, Yash, Rushik, Snehal, Vidisha. Okay. Now for this, CGST Act 2017 has provided 5 sections. Section 16 to section 21. How it to be incorporated, who is going to gain the benefit, etc., etc. So those 2 slides you have to write down. Those 2 slides are very important. Okay, whereby all provisions related to ITC has been given. Who is eligible, how much to be given, whether it will be allowed, till what extent you can avail the benefit, after when it will be lapsed, in what condition you are not going to not avail the ITC, etc., etc., etc. So in the pages, it has described in several pages. But as you know, from the beginning only, I have given you tabular form, right? Whereby we explain sections, subsections, clause, subclause, etc., etc. So same way, I have tried my level best to put all the points, okay? It will be in my writing. So if somewhere you are unable to understand, you go and refer the notes which has been provided to you, and you can make the corrections, or you can do the needful for your understanding. So now I'll be going to directly jump to these sections of GST. So these are 2 slides which comprises all the details of ITC, how the ITC is eligible, who can take the benefit of ITC. Only who are registered under GST can avail the benefit. Okay. no registered person shall entitled to credit of ITC when they are not able to gain the benefit. So it is there. The benefit is explained under section 16 subsection 1. Every registered person under section 49 entitled to take the ITC for the goods and service which has been inwarded supply. Okay, both to him which are used for the business purpose and to be used in the said amount shall be credited in electronic credit ledger under section 49. Electronic credit ledger I'll explain in semester 6. Okay, that is the part of semester 6 syllabus. Similarly, condition for ITC. Okay, that is explained under section 16(2). If he has imposition of tax invoice, debit note by the supplier, bills of exchange, these are the document which he has to produce. And not only section 16, along with the section 16 two rules, rule of 36 and rule of 37 is assisting how you can avail the benefit of section 16. Okay, so these kind of small things definitely will be there as a part and parcel of your objective type questions. Then 16(3), 16(4), everything has been, what is the time limit of ITC? A registered person shall not entitled to take the ITC in respect of any invoice or debit note for the supply after due date of furnishing the or filing the returns. So if you have filed and you have not availed the benefit of ITC, you will not get. So everything is there in section 16 only. If the registered person has claimed depreciation on tax component as a cost of capital good under section 1961 Income Tax Act, ITC shall not be allowed. Under section 16 subsection 3. So 3 and 4 is talking about how it is not to be allowed. And 2 is talking about how you can avail the benefit. You have to produce the record. He has to use those assets for his business purposes. And tax has to be levied to him or her when they have bought the goods from earlier vendor. He has to file the returns, and when there is a output tax liability, against that only you are going to get the input tax credit. Similarly, section 17 is talking about apportionment. How much portion you can take, proportionately how it has to be divided. That is explained under section 17(1), 17(2), 17(3), 17(4), 17(5), which talk about negative list. So 17(1) is talking where the supply are used by registered person partly for the purpose of any business or partly for other purposes, the amount of ITC shall be restricted only for his business. If suppose those goods has been utilized for his own personal purposes, he will not going to get the benefit of ITC. Similarly, section 17(2) talks about where the supply are used by the registered person partly for effecting taxable supply, including zero rated supply. You know, if you are making the goods where the tax output tax liability is zero, then ITC is restricted only the taxable supply and not the zero rated supply, because there is no output tax liability. So how you are going to avail the benefit of input tax credit? The value of exempted supply shall included in supply in which the recipient is liable to pay tax on reverse charges basis. That is explained under section 17 subsection 3. Under section 17 subsection 4, it talks about a banking and financial institution, NBFCs, engage in supply of services, how they are accepting the deposit, and how they are entitled to avail the benefit of ITC. Okay? And they are eligible only 50% of ITC on monthly basis. Section 17 subsection 5, ITC negative list item. So these are the negative list for food and beverages, member club, health club, work, contract, goods and services. Everything has been explained. And similarly, like section 16, we had rule 36 and 37. Here we are having rule 38, 42 and 43. Like 36 was talking which kind of documents we required. So invoice, debit note, bill entry or credit note. 37 was talking reversal of ITC. Here same way 38 is talking about claim of credit by banking company or financial institution. 42 is talking about manner of determination of ITC, etc., etc. So kindly take these two table with you all. Why I'm telling you? Because if you'll go to the notes, it has been described in pages. The notes which has been circulated to you, अगर आप देखोगे वो बहुत सारे पेजेस में दिया हुआ है. इतना आपके पास टाइम नहीं है, and it is not required even. It goes on pages to pages. इतना सारा अपन नहीं कर सकते. वही चीज को हमने सिंप्लीफाइड वे में दिया है. Otherwise, these notes are also available to you. Whatever the way you want to study, please study. So I'm keeping it in full screen of these two section 16 and 17 now. And after the break, we will going to discuss section 17, 18, 19 and 21. So today we are going to finish ITC. Am I right? Any confusion, any things you want to ask? So next again, I am going to meet after Gavaskar sir FM lecture at 9:40. Is this clear to everyone? समझा आप लोगों को? Tell me yes or no. And I'm putting it on full screen. चाहिए तो आप स्क्रीनशॉट ले लो और फिर आपके असाइनमेंट बुक में लिख लो of section 16 and 17. Am I right? Okay. Thank you.